Welcome to Keeping It Realty.
Welcome back to Keeping It Realty. I'm your host, Martha Smith.
And I'm your co-host, Natalia Pierantoni.
And today we have a very special guest.
Yes, she's an industry leader when it comes to mortgages.
Yep, she's the branch manager at Pioneer Mortgage.
And she's going to tell us all about the Hometown Heroes program.
Let's welcome Heidi. Woo!
Thank you. It's great to be here, you guys. Yes, I've been doing mortgages a very long time, and I was so excited when they released the Hometown Heroes program. It's a great program, and it's a down payment assistance program that provides a lot of benefits to buyers, and a lot of the things that are more restrictive with down payment assistance don't exist on this loan. So I was super excited to be able to have this program to offer to buyers. So
thank you for sharing that, Heidi. How long have you been in the industry?
15 years.
Okay. Wow. All right.
Yes.
Pioneer.
Yes. So Pioneer is a wholesale broker. We are the #1 volume broker in Florida, and I am usually the top producer at the company. So we do a lot of mortgages in our company. What that means really for buyers is that I've already made the mistakes. so I won't make them on their loans. This is a complicated industry with a lot of rules. So it's really important, when you're buying a home, to work with somebody who has experience and knowledge so that, you don't have a negative experience
hiccups,
or
right?
or something. Right. Yeah, something that comes up. Yeah.
Okay, so we're going to dive right into it. So tell us about this program, the Hometown Heroes.
So Hometown Heroes is a program. It's subsidized by the state of Florida, so it does go in the state budget, and it's a program designed for first-time home buyers. The home buyer must be buying a home in Florida, a primary residence, and they must work in Florida, or if they're self-employed, they're currently with like a business based in Florida. So their company has to have a physical location in Florida. It's conventional, FHA and VA is available. So there's a bunch of different types of loans you can do through the program. And the credit score requirements are pretty lenient, and so are the income limits. So yeah, it's a great program.
Okay. Can you tell us what the credit score needs to be?
Of course. Yeah. So 640 is the minimum score, and that's the mid score. So when you're on an application by yourself, we pull 3 credit scores. So we would use the middle score. If there's only 2, then it's the lower of the 2 scores that we use. If you get 3 scores, it's going to be the middle. And if you only have 1, obviously that's the score we use. If there's 2 applicants on the mortgage, then it's the qualifying score is always the lower of the 2 mid scores. So we don't average or take best case. It's always the lower of the 2 that determine eligibility.
So the purpose of this program, is it just to help frontline workers, teachers, first responders, or anybody can apply for this loan? Or
yeah, so when the program first came out, which was 3 years ago, they intended it really just to be for heroes, meaning first responders, nurses, and it came out right around the time of COVID. So I think that's sort of why they took that approach with it. They realized there was such a demand and a need for a program like this that they expanded it to include all occupations. And then the only qualifying requirement regarding employment is just that you're a full-time employee with a company based in Florida or with a physical location in Florida.
Can we tell the listeners, I don't know if we mentioned it, what the program offers?
Oh, of course. Yeah. So that program gives you 5% of the purchase price up to $35,000. And that goes as a silent second mortgage. So you don't make payments on it, and you don't have to change the balance on that at all as the term of your loan goes. So let's say you buy a $300,000 house. The program will send $15,000 that gets applied towards the funds you need for closing, and then you don't make any payments on it, and it doesn't change. So if in 5 years you sell that property, that just gets added to the payoff, the $15,000 that you borrowed. They call it a pay it forward program. So it's something that, the whole idea is that it keeps refunding itself so that more and more buyers will be able to use it. So each year they allocate about $110 million to the program. Those funds get exhausted in about 60 days usually. Occasionally they have added more funds. Sometimes they'll add an additional $35 million. Those funds then will typically run out in a couple weeks. So I always recommend buyers, get queued up for the program, get pre-approved for the type of mortgage they want, and then start shopping for their home. And we just have to make the closing date after the funds are available. We're expecting them to be available July 1st. No official announcement has been made yet, but we're just waiting for the state Senate to approve the budget, and then we should see that announcement come out. So.
Okay, awesome. I'm so excited for that. That's going to help so many people if they get in there quick enough, right?
I mean, if you think about $100 million and how, it running out in 60 days, I mean, it just kind of speaks to like the need for that program and the excitement about that program.
Yeah.
So it's a great program, and I'm so glad it's coming back.
Yeah, it's a big deal because if you're trying to buy a house and you don't have any money saved, but your credit is right and everything is right, then this would offer the opportunity for you to buy a home and not have to come out of pocket with that money.
Absolutely. And a couple, just one thing about the money, even if you have money saved, and this is really important, like, because some people think they have to have no money to use this program, but you can have money saved and you might opt to say, use that assistance and pay your credit cards off with the money you have saved that are carrying that higher interest and take advantage of the money that's available to you. So just keep in mind, the assistance isn't limited to people who don't have any money at all.
Right.
They don't even check that, honestly. So it's a really awesome opportunity for people.
Wait, so what if the money runs out? Like, what happens then?
The money runs out. Well, okay, so
And you're under contract. I mean, I don't know if that's happened.
Yeah. So if you want to use the program, again, I generally recommend like trying to go under contract. Like, let's say the money is available July 1st, which is what we expect. It's possible it might be pushed out to August 1st. Again, no official announcement yet, but assuming it's available July 1st, then what I recommend to the buyers is, start shopping for your house, get under contract for the property, and then we secure the funds as soon as we get the contract. So like some lenders, because this program is not exclusive to our company, but some lenders will make you wait until you're almost clear to close to hold the funds. We hold them as soon as the contract comes in so that, buyers aren't put in a position where they're expecting the money and then don't get it. But yeah.
Okay, so you're able to hold the funds for them until you close.
Yes, as soon as we have a contract, we'll hold the funds.
As long as you're under contract. Got it.
If, let's say, I pre-approved you and you needed down payment assistance and it just took you a long time to find your house, or, the program for some reason became unavailable, we have other assistance programs that we can help you use. So, so if something like that did happen, generally we would just move them to a different program that's also available for buyers. So
Yeah, there's options.
There are options, yeah.
In your opinion, Heidi, who should absolutely not miss out? Who is this program perfect for?
So this program is perfect for first-time home buyers. So you do have to be a first-time home buyer to use this program. One of the people on the loan has to be a first-time home buyer. And then it's also great for people who are cash limited or people who have cash saved and want to be able to use that cash for other purposes. So this program, I mean, it's just so incredibly popular because of how flexible it is with income. So there's all different down payment assistance programs. A lot of them have income limits, for example. And those income limits can be very restrictive. Some of the programs are household income limits too. So if you're married or have adult children that are working in the household and they make money, but they're not on your loan application, sometimes that can eliminate a down payment program for buyers. So what I love about this program is that it allows us to use only the income we're using to qualify. Doesn't have to be the household income. So it's great for people who maybe aren't meeting criteria for other programs as well. So, if you've tried to get down payment assistance and couldn't, or you were told you make too much money, this would be a great opportunity to check to see if you could take advantage of assistance.
So it sounds like more people are able to use this.
I mean, it's just, it's really opened up. When they took away that occupation requirement, it really opened up the program for a lot of people. So that was really great. Yeah.
Before you ask your next question, you said this is for first-time home buyers. So let's say you bought a house and then you sold it, now you're renting, and then you want to buy a house, a couple years later. Would you be able to use this program for that or no?
Yes. So you just can't have lived in your primary home that you owned in the last 3 years. So I've done, I put people through the program last year who had owned another home, but they weren't living in it. And so we were able to get them out on that technicality as well. Yeah, but the home you're buying through the program would have to be a home you intend to be your primary residence. It's not intended for investment properties or second homes. And you can buy townhomes, condos, manufactured homes, single family homes. So they also don't restrict the actual home type that you purchase. So, I have some buyers who really want manufactured homes. And that's another great thing about this program is some down payment assistance. You can't buy a manufactured home with this program. You can.
Oh, wow.
Yeah.
That's awesome. I love this program. That's why I was
is.
so excited. I was so excited to get
It's
her
a
on
great
here.
program. Yeah.
Okay, so can you walk us through what the buyer's journey looks like? Like how to apply, how long it will take, any mistakes to avoid that you may, give us advice?
Yeah. So the first step in the process is to apply for the mortgage. So, so obviously they would talk to the real estate agent, talk to you guys and just kind of get an idea about what they're looking for, maybe talk about budget, timelines, and then they'll fill out the mortgage application. We'll do a credit check and also check their income, just make sure they meet the guidelines for the program. We can start with a soft credit pool if the buyers prefer that so that their credit doesn't get hit. But to get to the underwriters, we do need to do a hard credit pool. And then so we'll give them a budget based on the program they're using. So in this case, if it's Hometown Heroes, they have a couple additional restrictions on how much the buyer can qualify for, what percentage of their income. So we'll give them a budget and then they'll start looking for homes. Once the home is found, they'll make an offer, hopefully go under contract. And then they'll make a deposit at the title company to hold the house. With Hometown Heroes, you cannot get that deposit back at closing unless it's a gift from somebody else. So what I usually tell the buyers to do if they're trying to get the money back that they put down is to get a gift from somebody, like have their sister.
That's a great
tip.
Or their parents make a deposit, something like that,
Right,
and then
okay.
we can actually give that back to them at closing. So they're going to make a deposit and then they'll do an inspection on the property, just make sure it can be insured and there's nothing needs to be repaired. We'll order the appraisal, put them into underwriting, hold the lock for them with the program so that, we secure the funds for them. It goes through the underwriting process. And then sometimes the underwriters need a couple more pieces of information. So we'll get that from them. We'll help them with their homeowner's insurance. And then once everything's in, it's put in for final approval. And then, the approval, once they're clear to close, they show up at the closing table, usually with no money with this program, sometimes getting their deposit back and get the keys to their house. So it's a really awesome experience for buyers.
We love the clear to close, don't we? When we get that email or text,
those are magical words.
Let's go.
Yes, we love saying them on the lender side.
For sure.
So
it's a lot of work involved.
it's always a happy email to send, the clear to close email.
for sure.
I had a
my favorite
question,
part.
but I forgot what it was.
What else? Anything else?
So that program, like we talked about, it's for conventional and for FHA. So with FHA, the buyers typically are required to put 3.5% down. So that leaves about 1.5% for closing costs. And then typically the realtors will try to get some closing costs paid by the seller. That's part of the contract negotiation. And that's how we're able to get people to the closing table with no money. With conventional, you can put 3% down, you can put 5% down, you can put 10% down. So if you want to put more down, because I get that question a lot from buyers, like, can I put more down? Absolutely. So you can use some of the money from the program and some of your own money if that's your preference. But I would say probably 85 to 90% of the buyers that I put through this program prefer to do the minimum down so that they can save any funds they have for other purposes, fun things like furniture and paint and, I don't know, doggy gates or whatever they want.
Updates, anything.
Yeah, or just like I said, paying off debt that might be carrying a higher interest. So, so one of the things I'm really focused on is like looking at the buyer as a whole and trying to help guide them for like what's best for them overall financially. My background is in finance, so I try to look at all of that and make recommendations to them. So again, a lot of times I have people use the program who had money, but they just opt to use this money because then they can take the money they have saved, do other things, investments, paying off debt, stuff like that. So, yeah.
What is the interest rate for for this program? Is it comparable to just regular programs, or does it depend highly on credit?
Yeah, so the rate has one program. The program has one rate for each type of loan. So if you are using conventional, they're going to publish a rate every day for conventional. If you are using FHA, it's going to be a rate published every day. So there's really no adjustments to the rate based on your credit score or anything. The mortgage insurance can be affected by your credit score if you're doing conventional. But other than that, and the rates are generally very competitive. Typically, they advertise them as below market rates. So let's say the normal going conventional rate was 6.75. The program would be probably around 6.5. So, so you do get actually a little bit below market interest rates, which is great because a lot of down payment assistance programs sometimes have higher rates and the buyers are kind of paying a penalty almost for using the program.
Right.
Well, that's not the case here.
Got it. Will the buyer have an option to buy down the rate at any chance, or this program will not allow to do
No,
that?
because
Okay.
there's only one rate every day. There's no rate table.
Gotcha.
So they just will get whatever the rate is for free. And then they do get some, a couple of the government fees that are typically paid, the state waives. So there's a couple fees that are paid to the state of Florida, and they're actually waived when they use this program too. So their closing costs are actually less than with a typical mortgage.
Okay.
Yeah. So we just have to keep our fingers crossed the
that it
state
comes-
passes that budget
Yeah.
soon, and then we can, it will be a floodgate opening because, like I said, the demand is very pent up. It's because there's a lot of buyers who couldn't qualify for other DPA programs, that this one is really the one that they fit into.
Gotcha.
So it's a popular program. So if you guys are interested,
Yeah, I was
Get on
going to
it.
say, if somebody is interested in this
Yes.
program, what can they do today to kind of be on the waiting list,
yes. So again, I would absolutely reach out to Martha and Natalia about letting them know you're ready to purchase a home. They can connect you with me and we can, do the pre-approval process and then kind of have you on standby and make sure that, so for example, let's say I pull your credit, I do a soft pull, I get a 630. That gives us a little bit of time to advise you what we need to do with your score to get it to a 640 so that you're able to qualify for that program. So, so it's really important,
So it's
to
good to
prep
start now. Yeah, to
Yes,
start now. We can walk
absolutely.
you through getting your credit where it needs to be, getting you in line so that when it's available.
Absolutely.
Correct.
Good
Absolutely.
stuff.
And then the other thing I'll mention too is with your income. So if the income limits, we're expecting them to be around 145,000 a year. So if you're listening and you're somebody who makes, 130,000, but you get a $20,000 a year bonus, we'll just leave your bonus off the application and you can still qualify. So just keep that in mind. We'll look for ways if you think you're pushing that income limit to get you to qualify. A lot of people are below that, obviously, and that's not an issue. But I do have buyers who use that program who we had to kind of exclude certain incomes to keep them within qualifying.
Fair, that's fair. Okay, so let's talk. Let's talk. If you're interested, we can make it happen for you, right?
Absolutely. Yes.
Anything is possible.
Yes.
Yeah.
Fabulous
We'll
program.
find a way.
Yeah,
Oh, we do. We always do.
All right. So I think that
that sums
covered
it up, right?
everything, right?
Did we
Yeah,
miss
I mean, there's
anything?
not much else about the program I really wanted to cover. I think we hit all the main points. Just a couple things, like if you're interested in a condo, it still has to meet certain guidelines for lending on a condo. And if you're interested in a manufactured home, it has to be built after 1994. So
94?
94.
there are
Okay.
a couple restrictions on manufactured homes, and your credit score has to be a little bit higher. You have to have a 660 for that. So
Okay, so you
Other
have
than
to
that,
have
different
higher
requirements
credit
for different-
and to buy a mobile home, and it has to be newer, 94.
yes.
Okay, got it.
That would be the only other thing I can think of about that program.
Okay.
Yeah.
All right. Well, let's put Heidi in the hot seat,
Yes.
like we
Gosh.
always
Okay.
do. Are you
ready.
ready for a
ready.
Keeping
Let
It
me-
Realty rapid fire?
Oh, she's cracking.
she's
ready.
ready.
Everything.
I'm ready. Let's
She's
go.
ready.
All right. So what's harder to overcome, bad credit or high debt to income?
Oh, I would say bad credit, because with high debt to income, we can always have you pay things off. So, and sometimes credit is really depending on the credit, sometimes it's
long.
easy to push it up, but the timeline I would say is usually longer.
Okay.
So
Are you an early bird or a night owl?
for work, night owl, I would say, but for just life, probably more an early bird, but I love to work late at night. Like I love to just sit on the couch with my laptop and work. So for work,
you can
glass
focus.
of wine and
yeah, not too many, not too many glasses of wine.
Okay, no, I guess that's what we do.
Yeah, okay, that's just us.
Okay, so one word to describe the mortgage world in 2025.
Oh, that's a good one.
Complicated. Let's go with that. Okay. There's a lot of rules. So it's complicated. Yeah.
Okay. So if you weren't in mortgage, what would you be doing?
Oh, I would probably be in my old career. So I would be like, I used to do product management. So product management, if I wanted to do something I loved, well, I love mortgages. I'm trying to think what I would do like in my dream job. I mean, I would probably love to do something like shopping, like a personal shopper, because I love to shop.
I love to shop.
So, you know,
myself.
That's good.
I could probably spend all day at the mall.
A professional spender.
Yes.
When people come shopping with me, they're like, "Are we done yet?" I'm like, "Nope, we're still going." And they're like, "Can I have a glass of water or a break?" I'm like, "Nope, we're still going." So probably a shopper. Yeah.
So what's your mortgage superpower?
Superpower. I would say problem solving and loan structuring. I mean, those are things I'm really good at. So I it's like a puzzle to me. So I really like the fun of like trying to figure it out. So I would say
I've witnessed that firsthand, by the way. I vouch.
Yeah.
All right. Do we have any more? I think we do.
You do.
What's your go-to place when you need to decompress?
The gym.
Good.
Yeah, the gym. Yeah, absolutely.
What is one thing agents can do to help make the deal go smoother?
Ooh, good question.
So I would say the biggest thing that comes up a lot of times with agents is, well, on the inspection, I mean, you know, you want to make sure that you're getting things cleared that we need for the insurance. Because I've had a few times where, you know, we asked for the inspection reports and things weren't addressed. So that absolutely, because we have to be able to get insurance on the property. And then the other thing I would say is just, you know, communication with us and the buyer. And us all being on the same page really helps a lot, because sometimes the buyers will come to you with questions that are more for me. And, you know, so if we're all kind of talking at the same time or being redirected to the right professionals, it does tend to make things go better for the buyers. But I mean, almost all the realtors I work with, and I'm talking about the listing side and the buyer side, are great, you know, and we try really hard to, you know, if there is a shortcoming with a realtor, to, you know, kind of fill in that gap by maybe, you know, providing information or asking for something that the realtor might have overlooked, you know. So we do try to
work together.
Yeah,
communication.
That's how it should be.
And I really, that's one thing about this industry that was challenging, but, you know, I've learned to kind of manage it a little bit better is, you know, like, it's not any us versus them. Like, it's literally like we are all like team closing, team buyer, you know, and if you're on the listing side, you're on the closing team too. So, you know, so the more kumbaya-ish we all are, the smoother it's going to go for everybody. Yeah. So I'm a big fan of just like communication and
finding the solution.
Yeah, and just
done.
being solutions oriented. It's not there's things come up and the time to place blame is not in the middle of the process. We just fix it.
Fix it.
Yeah.
So. Love it.
Right. Thank you so much, Heidi, for joining us today. The information you gave us was so useful. This program is going to help so many people. I'm so excited for it.
It's going to be really amazing.
Yes.
And if you're a buyer listening who's interested, like I said, I wasn't exaggerating when I said the money runs out in 60 days. It goes really fast. You know, so I would want you guys to definitely, like, you know, look into the program, get your pre-approval ready so that you can take advantage of it.
Yeah.
And even if you're planning on making your own down payment and you're a first-time home buyer, consider, you know, using that money for things like your 25% credit card interest or, you know, other things that you might be paying a lot for, so that you can, you know, put yourself in a better overall financial position when you get into your house.
Yeah. And to touch on that, we had a Hometown Heroes program last year, and it lasted how long?
It was like less than 60 days.
Yeah, it was like it felt like a month.
It was
like
fast.
it came out, and then before you know it, it was over. So
And even if they replenish it, so what happens is we reserve the money, and then if somebody cancels a contract or for some reason the loan falls out in underwriting, which doesn't happen with us, by the way, but if somebody made an oversight and their loan fell out, then the money goes back into a pool of funds. So for a few weeks after the funds run out, you might have a chance to grab funds. Like they'll release them usually one morning a week, and we can kind of be in line and like grab them.
if you have the right lender,
Yeah, but
that's
there's
checking it.
Somebody like stalking the site, but there's no guarantee of that, obviously. So so it's definitely better just to not have that stress of, am I going to get it? Am I not going to? So. This is
So we're already looking forward to having you back to talk about
Yes.
another hot topic, which is the FHA construction loans.
Yes.
We're going to have her back in a couple weeks, so you guys can look forward to
tuned.
that.
That is one of my favorite loans. So I love to talk about that. These are two of my favorite topics.
Well,
There you
good.
go.
Yeah,
We're
guys,
excited.
good ones.
Okay. As always, guys, if you have any questions, you can reach us at keepingitrealty@gmail.com. And that is all for today's episode. I hope you found it useful.
And if you know someone that, would love to get this program or any other questions, let us know. Share this episode with them.
Yep.
And see you next time on Keeping It Realty. Thank you all for tuning into our podcast. And I hope you guys enjoyed it as much as we did.
Don't forget to follow us on social media at keepingitreal_T and share this episode with all your friends.
If you guys have any questions and topics that you guys would like for us for future episodes, let us know. Shoot us a message. We would love to hear from you guys. See you next time on Keeping It Realty.